Scott, welcome. In your view, what are the key drivers for investors at the moment?
Well, thanks, Georgie, for inviting me to this studio. Our investors and our clients are really focused on, one of the biggest topics they're really focused on right now is inflation and whether or not we're going into a different macroeconomic regime. Our perspective is that that a number of the tailwinds to lower inflation are now starting to ease. So whether it's now we're seeing global deglobalization, or we're seeing some of the big centers of disinflation over the past number of years, Japan and Europe, now entering into economic releveraging. And on top of that, you've got a number of other factors, whether it's higher fiscal deficits, tighter labor markets, commodity supply-demand imbalances, or even global supply chain realignment. We think all of these are leading to what's going to be higher and more volatile inflation. And so central banks now are really going to have to weigh off the differences between growth and inflation. And what that ultimately means, the implications for investors, in our opinion, is that there's going to be more globally divergent economic cycles, that there's going to be greater dispersion between countries and companies. And so for a firm like ours, an active manager, we think that's just a much wider opportunity set that we're excited about. Maybe one asset class where we're seeing a pickup is fixed income, driven maybe by those higher rates, but with that compelling all-in yields, and that all-in yield provides a little bit of a cushion as well. For us, we like credit. We think that it's play off of that stronger economic growth, that resiliency. We think that we're going to be entering into a much more benign default environment due to that growth, also stronger balance sheets, and within credit there's always really compelling idiosyncratic opportunities.
On the theme of global diversification, you formerly led Asia Pacific for Wellington, now global, but you led those markets. What are your thoughts, and you lived there, what are your thoughts on those markets?
Yeah, great experience. We've got a lot of great clients there. The two markets that we find really interesting are Japan and India. So Japan, we think that the market's moving from structural deflation to structural inflation. We think that there's a number of drivers to that. One, the negative interest rate cycle is ending. Two, you're seeing tighter labor markets pick up in wage growth. And so we really think that Japan is in that sweet spot right now of both growth and inflation. On top of that, you're seeing improving corporate governance, increased focus on shareholder profitability, shareholder returns, and I think that some people forget about some of the great technology that Japan has, whether it's factory automation, auto electrification, or what they do on the semi side with materials. So we think it's always been a great alpha market, and now we think that the beta is going to be positive and sustainable as well. The other market that we like is India. India, for us, we just had a number of clients and investors traveling around, and the biggest feedback from that trip was, as you meet with companies, you can really feel the growth, the vibrancy, the optimism, the startup culture. It's a market that has great demographics. With that rising middle class comes rising wealth, rising spending. You're seeing an improvement in the housing cycle, a lot of fiscal spending as well, very stable politics under Modi, who's pro-economy. So for us, you pull that all together, you've got arguably the world's leading growth. It's a market that is not cheap, but it's one that again, for stock pickers, you can find companies with great earnings and great returns that justify those valuations. So that's an area we've been putting more money to work.
More broadly, looking forward over the next, let's say, 5 years, where do you think the themes are going to be? What are going to take up your priority, basically?
In terms of themes, well, maybe being here at Milken, it would be apropos to talk about healthcare. But for us, we are the world's largest healthcare investor. In fact, our CEO, Gene Hines, is an active healthcare portfolio manager. So it's a sector that we have a lot of conviction in. A lot of the drivers are secular. You know, when you think about demographics, I made the comment about India, but the emerging markets, the rising middle class, rising wealth, that typically leads to an increase in healthcare spending. But even in the developed markets with demographics, the aging of demographics, that leads to increased healthcare investing. But for us, the biggest excitement is really on the innovation side. When you think about the drug discoveries that are happening right now, gene therapy, antibody drug conjugates, Alzheimer's, diabetes, there's some really, really exciting things that are happening happening, not only just managing the symptoms, but getting after prevention. And I think that innovation really shows up by the FDA. If you look at the FDA last year, they approved over 50 novel first-time drugs. That's roughly double what it's been over the past 10 to 15 years. So really exciting space, a lot of a sector that has offensive and defensive characteristics. There's a lot of winners and losers inside that industry. So if you have industry specialists who can take advantage of that, we think it's a really interesting place to invest.
Scott, thank you so much for your time.
Thank you.